When you look at what's happening in China and the turn in sentiment, particularly from foreign investors, is this a fade of the China growth story?
Unfortunately, that's the case. You must remember that China now is a huge country and cannot grow at the rate that it grew 10 years ago. You know, it was growing at 10%. This is gone. This cannot be done anymore because of the size of the economy. But added to that, of course, is the geopolitical situation. You know, the recent comments by the foreign minister, one of the foreign ministers in China about Eastern Europe, and then comments about the Philippine buildup by the U.S. All these things are increasing tensions, and it scares a lot of institutional investors that would be normally willing to put a lot of money into China. So it's a real problem. That's the reason why you see this kind of a performance. What's surprising to me is that the domestic market is not very good. In other words, if you look at the Chinese index, it should at least be 50% composed of domestic investors. So what we're seeing is a lack of confidence on the part of domestic investors in China, which is also not a very good sign.
Mark, give us a sense of what you think then this means. I know there's been a couple of central bankers and even Janet Yellen talking about fragmentation because of geopolitics. But as an investor, how do you play this?
Well, I think the only way to play it is to go through Taiwan. You must remember, trade between Taiwan and China is very, very big. And you can get exposure indirectly by investing in Taiwan. And if you look at the Taiwan market, it's done very well, particularly in the tech area. That was the way to get exposure to China indirectly. And then maybe a few Hong Kong stocks that are getting exposure to China, but are a little bit separated from the China situation. So I think that's the way to do it.
Okay, that's really interesting that you play China through maybe the semiconductor play of Taiwan. When it comes, Mark, to technology, you've seen a raft of measures now to kind of ease back on some of that regulatory squeeze from officials in Beijing, coupled with, of course, the reopening impulse. But the fade, again, around tech has been quite significant, quite marked in the last few weeks. What do you make of the prospects for China tech in the months and quarters ahead?
Well, there's no question that China is going to be very aggressive in getting the highest technology in tech, in semiconductors in particular. So that's not going to end. And actually, it's kind of bullish for a lot of the subsidiary firms, the so-called fabless firms, because they'll be serving now two customers instead of one. They'll be serving the U.S. market and the Chinese market. So that's the reason why we're kind of bullish on the Taiwan stocks in that area. But no question, tech is going to be continuing to grow and will be very big going forward.